Hello and welcome back to your South King County real estate update. My name is Sarah Eggleston with Stone Egg Realty at John L. Scott, and I'm back to deliver your local real estate news for the week. It is a very exciting episode. It was just a dramatic week. So I'm going to go ahead and jump on into it. Okay, so today is February 3rd, 2023, and let's find out what happened this week. Or actually, what is happening this week. So this week, I am hosting a webinar with a lender that I am super excited about. It is for teachers, nurses, first responders. I'll bring up the list in just a second, but I am super excited about this one. It's such a great program, and it's really meant to just give back to the community. So if you know somebody who falls into one of these categories that is considering purchasing a home in the near future, please let them know about this class. It's a webinar, so it's super easy to attend. Just comfort of your own living room, log in, and we're good to go. So I'm going to go ahead and jump back on into these slides so that we can see all this information. So this week, these are the eligible borrowers for the STAR loan program, which is the program that we'll be talking about. I will be there giving a market update. So technically, this class is valuable for a number of people that would be considering purchasing this year, but it's really geared towards teachers, school counselors, police, sheriff, highway patrol, firefighters, first responders, correctional officers, border patrol, nurses. This list here is who this class is specifically geared for. So if you know somebody that falls into one of these categories, please let them know. It's a super cool program, and I am really excited to present this and our market update along with that. So make sure to sign up or share with somebody that you know that falls into one of those categories. And we do have another class coming up later in the month, February 27th, the last Monday of the month at 6 p.m. This one is an in-person class at the Brewmaster's Tap Room. I am super excited about this one because it is about the loan type that my husband and I used to purchase our home. And I couldn't be happier with how our home turned out. We got to choose all our own finishes, have things done the way we wanted to, and have all those renovations paid for in our loan. So over the course of 30 years, but we get to enjoy them now. So this is just a super cool loan program, and I really encourage you to sign up if that sounds like something that might be interesting to you. So yeah, if you're a HGTV demo fan, come on down. Into the news, the U.S. housing market cools with prices down 2.5% from peak in June. This is a national article, and this is for November stats because this is the CoreLogic Case-Shiller price index that came out, and this is a couple months lagging. At the bottom of the page here, it says the index, which lags 2 months, tracks single-family home prices in King, Snohomish, and Pierce counties. That is a little bit delayed. Things have changed since then. But if we're looking at October to November, home prices dropped about 1.5% here in Seattle, which is one of the fastest cooling markets in the nation as far as the big cities are concerned. The Seattle area prices dropped nearly 12% from June to November, but it really varies across our nation what happens month to month, year to year. So we'll get into that in just a minute. And I have some overlapping text here. But the Fed raised the interest rate this past week by a quarter point, but says inflation is easing. This is something that we kind of expected to see based on what the Fed had talked about leading into this. But the Fed did raise the interest rate a quarter point, not the half point or 3/4 of a point that we were seeing last year. So that is good to see. We're headed in the right direction. But throughout Wednesday, Powell sounded a dual message. He frequently acknowledged the signs that high inflation is slowing, yet he also stressed that it was too soon to declare victory over the worst of inflation in 4 decades. We will need substantially more evidence to be confident that inflation is on a long, sustained downward path. They're saying that we're seeing some good signs, but not enough to start either keeping the Fed interest rate steady or decreasing it. And as far as inflation, seeing goods prices slow down on the inflation, but it is more of a concern about the services. This is foreshadowing for later in this episode, later in this week. There was concern over price for services because wages have gone up. I'm foreshadowing a bit, but there are a lot of jobs created recently. This is something that would be negative for interest rates. But the Wall Street investors, they're only thinking like one more hike is coming. So we'll see whether the Fed continues to raise the interest rates throughout the year or whether it is just one and done heading forward. This is super interesting because whatever the central bank and the financial markets are doing is completely different, and the divide is having effects throughout the market. Since the fall, the average mortgage rate has eased to 6.13. Inflation eased to 6.5% in December. So this is a good number to see going forward. What does the Fed rate increase mean for mortgages, credit cards, and more? We're just focusing on the mortgages here, but the 30-year fix doesn't move in tandem with the Fed's benchmark rate. It moves more along with the lines with the 10-year bond. After climbing to above 7% in November for the first time since 2002, the mortgage rates have fallen to 6.13 this week. Other home loans are more closely tethered to the Fed's move. Home equity lines of credit and adjustable rate mortgages, which each carry variable interest rates, generally rise within 2 billing cycles after the Fed's rate change. So they're expecting rates in certain loan types to go up and other loan types to go down. And that brings us to our local stat minute. For King County, for new listings, we had 453 new listings in the past 7 days, 669 pending, and 304 sold. So we're ticking up in all categories just ever so slightly. We bring it to our local area breakdown, you can see how different the market is. Renton and Auburn have pretty few new listings compared to the pendings. Kent and Federal Way are looking pretty similar as well on their new listings compared to the pendings that are happening there. So there's Renton and Auburn, Kent and Federal Way, 2 stories, but all areas have more pending than new listings. We have very few new listings coming to the market right now. And for our monthly recap, this is Southeast King County. We had an overall month supply of 0.8. So if no new homes came to the market and they all continued to sell at the same rate, we'd run out of homes in just under a month, 0.8 of a month. But the distribution of that over the price ranges is very different. Under 350K, it's 0.4 months, and over 1.5 million, it's 5.3. So those are, the higher up you get in Southeast King County, the more of a buyer's market it is. If we look at Southwest King County, that's a little bit of a different story. Under 350K, we have 1.4 months supply. So that is a pretty stark difference from Southeast King County. Everything else kind of falls into a similar line, headed up to 3.5 months supply in the 1.5 million plus range. Depending on what area you're looking in, what price point you're looking in, it can be a very different market. So make sure you work with an agent that knows the area that you are working in. But I just wanted to look at this. This is for Southwest King. Southeast King was pretty similar on this graph here. But 2023 is the purple. We just got our January numbers. These are new resale listings coming to market. Look how few we have compared to past years. We just have really few new listings coming to market right now. And we're seeing buyer demand increase, as we can see in this chart here. So the green is newly listed homes. The orange is pended, and for the current month, we have the gray. And we have popped far above this listed line. During the pandemic, the orange bars are pretty much eating up all the area between the orange and the green. And it got really hot in 2021. 2022, we can see a little bit more white gap in between the chart here. So there was less buyer demand and more listings coming to market, but those listings stopped coming to market pretty quickly. And we have way fewer homes that came to market in December than we have for as far back as this chart goes, till 2018. But we did have a bump up in this current pendant for January. So this is a very powerful buyer demand metric that we definitely need to pay attention to. For last week, our weekly average mortgage rate was 6.13 and our daily was 6.20. For this week, our weekly average mortgage rate falls to 6.09, but there's a little bit of news here. The Fed raised its rate by 0.25 earlier this week. We expect that to continue, but at a more gradual rate than we saw last year. Those rate hikes do impact borrowing rates across the board for businesses, families. Rates on 30-year mortgages usually track the moves of the 10-year Treasury yield. So we've talked about this many times before. We don't follow the Fed interest rate, we follow the 10-year yield, but the Fed interest rate does affect the 10-year yield. If we look at today's interest rate, it's at 6.19, but look at this. It's a 0.2 increase from yesterday, which is a pretty big jump for a single day. And if we look at that on this chart here, today, it did jump up quite a bit. So what happened? Wild ride. Oh, man, I had some formatting issues today. Sorry about that. But today was a wild ride for rates after a stunning jobs report. Today, there was a new jobs report that came out that had way more new jobs created, a way stronger jobs report than anyone expected heading into today. Here's that on a visual basis. Here's the non-farm payrolls. That's just a fancy way of saying jobs. So we were ticking down in jobs, and today we just shot up on the most recent job report that came out today. Some of these massive gains can be attributed to seasonal adjustment, but that is definitely not the whole story. In other words, despite anecdotes that speak to cracks in the economy, the most highly regarded measure of unemployment says things are super strong. This jobs report is a massive metric that the Fed looks at moving forward, adjusting their interest rates. So the fact that this came out after they raised it a quarter point, if this had come out a week prior, I don't know what the Fed would have done. I would expect they would have taken a different path rather than quarter point raise. But this was a surprise to a lot of people of how strong our job market is. Despite the volatility in the short term, the bigger picture is much calmer. This all hit after yesterday was the lowest daily rate in, 4 months? More than 4 months. But despite the volatility in the short term, the bigger picture is much calmer than it had been in late 2022. We are headed to calmer seas, even despite this one surprising report. And if we look at that on the graph here, we are headed towards calmer seas. Future data will depend on where we head eventually, but overall, we're heading towards a plateau. But our mortgage news daily rate, you can see the big jump up. We hit below 6 yesterday and then jumped up above 6, close to 6.25 today. So that was just a big jump for today. We'll see what happens moving forward. But one last push, make sure you register for my home buyer classes if you are thinking about purchasing a home this year. Both of these classes will have things that are valuable, even if you're not using either of these loan types. But I am super excited about both of these classes. The home buying for teachers and nurses, that's coming up this week, this Tuesday. So make sure you register right away for that one, especially. And the renovation loan workshop, this is one, as I said before, that is very dear to my heart. I cannot wait for this class. and it's an in-person class at Brewmaster's Tap Room, which I love. So make sure you register today. I would love to see you there. So again, teachers, principals, school counselors, police, sheriff, highway patrol, trooper, firefighters, first responders, correctional officers, border patrol, and nurses currently active or retired. Make sure you sign up for Tuesday's class because there is some good stuff out there for you. If you have any questions, please feel free to reach out. My phone number and email address are on the screen there. I would love to have a conversation with you about the real estate market in your area, one of my home buyer classes, any other questions related to real estate that you may have. Let's connect. I can't wait to chat with you and answer any questions you may have. Thank you so much for joining me. I will see you next Friday afternoon with your local real estate news for South King County. Have a fantastic week, and I will see you next Friday.